Yo, good evening, ladies and gentlemen. Okay, so this will be the third installment of the Vector Candle Strategy series that we are currently doing so that you guys can get more insight into what the Vector Candle is. So we're going to bring it straight back. What is the Vector Candle? The Vector Candle is a representation of the frequency of how many trades are happening inside of any chosen candlestick. You see, when you're on the live streams, ladies and gentlemen, we look for these volume bars. And all you need to do is just go into TradingView and just type PVSRA volume suite, and it will present to you these volume bars down below. Now, this isn't based on volume. This is tick volume. So what is tick volume? Tick volume itself is a representation of when price goes up and down and the volume inside of it. So in other words, how often does price change? Okay. So if you refer down to this big volume bar right here, you'll see that price had changed 36,000 times, all in the space of an hour. Now we're talking up, down, up, down, up, down, up, down. Okay. Well, what can we get from the tick volume itself? Does the tick volume tell us exactly what Mr. Market Maker's doing? Now, what you've got to be aware of is quite simply the variations of vector candles, whether they are blue, green, red, or purple. They have representations that are going to give you an insight into exactly what is really happening. Now, as we progress in the series itself, you will come to understand what does each vector candle point represent. Now, we'll be diving into other aspects such as the length of the candle and what does that mean? Because sometimes you can see a volume candle. For example, the next one after this green vector, you can see that it's a blue vector candle with a wick. Volume is nearly more than 50% what the previous candle was. So one would agree and say, yeah, that is quite a strong candle. And although that price had wicked out to the upside, it came back in, still managed to stay positive. But that's for another video where we do a deep dive into vectors and wicks. And once you're geared with that, you'll then come to understand that the vector candle itself is a representation of the force and the will that the market maker puts onto the market to make traders do something. And that something is simple: to buy. Now, when they push price up into a range like this, just know that when you visit or see a vector candle in the charts, just know that this is not an indication for you to go long. No. This is preparation for price to go short. Now, you'll probably look at this and say, Tino, hold on a second. What do you mean, bro? Because look, price ended up going higher. That is true. But when you look at the bigger time scale of things, you'll say to yourself, all right, then, let's just take this idea. Now, the green vector candle is right here. And if I'm saying to you that you do not go long on a green vector candle, what if you miss out on an opportunity for a move like this? Well, let's just go back in other vector candle principles. You can see in this zone right here, ladies and gentlemen. Now, when you see a green vector candle here, you're thinking, okay, Bitcoin's getting ready to pump. Let's get ready for the shorts. Well, that short story came out. 1, 2, 3 vector candles pushing price out of the range for them to initiate a follow through up to trap the trader for them to only come back down into the range. Now, they don't always go to it straight away. The sooner they come into the vector candle point, the more information you get about the move. You see, if you go into the charts, you can see that every green vector candle in front of us right now has been recovered. And what followed on from that was another move to the upside. Look at this. Green vector candle comes down. They even tap into this blue vector candle zone. Price then reverses back up, comes back down, recovers the whole range completely and finalizes at this green vector candle. Then they initiate another move to the upside. 1, 2, 3. They reverse the candles, bring it back into the range. And then they initiate another move to the upside and instantly come back down again, which was then followed by another move to the upside. Now notice when they don't fully recover vector candles in the chart, that is an indication that something might actually change. So you really want to be paying attention to how often or how long it takes them to recover a candlestick. If you witness this green Victor candle appearing and then you only see 50% of it being recovered, just know at some point they're going to come back to that imbalance in the chart like they did over here. Now, there are many various ways that you can translate the actual volume of the tick chart itself in relation to the actual vector candles that are appearing in the chart. You have these stopping volume candles, which are the same principle, but they are smaller bodies with strong volume. Here is another example of it. Look at this candlestick. Small body, a massive transaction. Now, the stopping volume candle, which looks like this, if you zoom in, if you see the stopping volume candle, where it shows a wick on both sides. Sometimes they do both sides, sometimes they don't. Okay? An example of them not doing both sides would be like this. For example, look at this one. That is acting sort of as a stopping volume candle. And this one right here. So what do we mean by stopping volume? It means that the market maker is attacking a point in the chart that he doesn't want to allow the liquidity to be released to continue in that direction. So it's sort of like a way of the market maker's way of saying, right, let's just tap this zone, but bring it back just in case we do get an influx of traders because we know we can get some more orders filled at a different price point. Let's prioritize and get that liquidity first and then bring things back up for us to only come back down into that range. Later on in the channel, in this series, you will come to understand when I talk about vector candles with wicks, at how they always usually end up getting recovered. And this is something that if you go back in the charts and mark off, you'll understand that is something they always end up doing. So to bring things into perspective for you, every time you see a green, blue, red, purple vector candle, understand that it's the amount of times that price transacts. It's based on the frequency and the force behind the market maker trying to move price in one direction to create the illusion that traders should go long or traders should go short. Now, the blue and purple vector candles are a build-up of price action or a build-up of the force, the intention. Because if you notice, you see a blue vector candle right here, and then you've got a green vector candle. So this blue vector was enough to get the retail trader into the belief that things were going to change. And then they follow through with a big green vector candle, and then they've got the traders trapped inside of this zone. Stopping volume candle comes up here, where they spike price higher, they bring it back down because they want to contain price in this zone till they wait for the last moment to initiate the climatic candle, where they shift to the upside, but look at the volume. Straight down here, you've got low volume. Stopping volume candle is more volume. The move to the range comes in with more volume. But you could tell that they were slowing things down as they were making highs. So some of you guys who may already know, you've got divergence in the chart, especially in terms of volume, making a new high and the volume's not present. Moving forward, ladies and gentlemen, how are you to use this concept that I have just discussed? Quite simply, what you're waiting for is a green vector candle to show itself. Once you have a green vector candle, apply it and come into the chart and look at the volume down below. Once you see that happening, you'll be of the understanding that there is activity in the chart and Mr. Market Maker is trying to do something. He's trying to get traders to commit liquidity. Because remember, traders need a reason to buy and sell. So go back in the charts, ladies and gentlemen, and pull up every green vector candle that you see in the chart and just have a look at the way the volume is and look at the result of that. And you'll start to understand that when you do see a green vector candle appearing, you'll start to say to yourself, you know what? There could be another move from here. What if they continue with the move? What are you looking for? You're looking for a retrace back into it, because if they don't retrace into it straight away, anticipate that they will retrace into it at some point. For example, 1 hour time frame, you've got this green vector candle right here. The principle says that we would anticipate Bitcoin to come back into this imbalance. It may take a week, it may take a month, it may take 6 months. The smaller the time frame you use, the more often you're going to see them recovering vector candles. So if you don't want to wait that long, then go on to the smaller time frames and you'll be able to try and understand how they recover the vectors. Believe me, the hybrid system is about practice. And I say it to everyone. I say it to the Discord members, Patreons, the pattern watchers in the Discord as well. I say it to everyone. This game and this system is all about practice. Because if you can't break it down in hindsight, you ain't going to be aware of what to anticipate in foresight. Ladies and gentlemen, thought I'd keep it short and sweet for you. But I hope that actually solidifies the understanding of what the vector candle is in relation to the tick volume. Now you should have a better understanding of how to approach the charts in relation to volume using the PVSRA volume suite. And I'll be checking in with you guys tomorrow night for the last stream for this week, as I'll be going away on my travels. Mad love and respect to you guys. Take care of yourselves, family. Peace.